on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a great day today. Bitcoin and cryptocurrencies are springing back across the board. We actually spoke about this yesterday. We talked about the funding rate being negative, and there was the potential for a short squeeze. Now, is this the move that we were looking for? Well, I'm not 100% certain, but we did have a nice bounce. We are up almost 10% off the $39,000 low that we did have, and you can see right here, we were talking about the hash ribbon indicator and how it was flashing by. And although it didn't necessarily mean that the low was in, it was looking potentially good for Bitcoin. And as you can see right here, if we zoom in, we actually had virtually a perfect bounce right here off of the top of our blue zone. So in today's video, what I do want to talk about is this bounce significant? Are we looking for more move to the upside, or was it just a short-term relief rally? Well, there is some massive news that just came out yesterday, probably has something to do with why we are seeing this Bitcoin price action. I want to discuss who exactly is driving the Bitcoin price right now, who is buying. We do have some very interesting data on that. And there's also some massively bullish fundamental news that has come out for Bitcoin, which I do think we need to pay attention to. We are seeing some big changes happening across the space. So in today's video, we're going to keep it nice and short. We're going to talk about what to expect for the Bitcoin price short term, where we are currently in this market, and what exactly is driving the price. So if that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. And let's dive in and have a look at the chart. So we did talk about this negative funding rate. I'm not going to go into that again. We also spoke about the hash rate indicator, which I did explain to you guys that every single time we do see this indicator flash, it usually signifies that there is the low. The low has been put in, and we generally never go to that previous low. Now, that previous low is sitting at around $29,000. I know what you're saying. That's still kind of a far fall from these price levels. However, we've seen that historically the price has never gone below those levels, with the exception of one time in history, and that was obviously during the Black Swan COVID crash. But other than that, it has virtually a 95% accuracy, right? So having a look right here, the one thing we were talking about was just basic, a 5-year-old could understand this chart. Obviously, what we're trying to do here is flip the previous resistance as support. So obviously, we had major resistance right back here in January, where Bitcoin got up to that $40,000 level. We had the same thing right here, a little bit of consolidation, right? And then if you actually look at the past 3 times that Bitcoin has fallen, we had support right back here. After the crazy liquidation cascade, we still got support on that level, and we are in fact bouncing back right now. So even though the markets still technically are in a bit of a neutral territory, I know some people are saying full-on bear market, we're going to zero. No, guys, it's not a bear market. There's been a lot of things that have been going on right now, especially with the Fed raising the rates, which I did speak about in yesterday's video. I don't think it's actually going to have as much of an effect on the market as a lot of people are thinking. And my reason is because it's not something unexpected, right? We're expecting them to do this, right? Short term, of course, it could get a little bit weird, but ultimately, guys, look at this. We are still maintaining this perfectly bullish trend, right? Perfectly flipping resistance into support. And if we zoom in right here, you can actually see that we are having a bounce on the weekly, not only at this legacy trend, which is very important, but also, as I showed you, at the top of this blue zone territory. And market structure is still continuing to put in higher highs, right? Even though we haven't gotten above the $69,000 level, but we've also been putting in higher lows, right? We had this low down here around 10,000. We had this next low down here around 30. And, obviously we don't know what's going to happen. Anything could change in the upcoming weeks, but thus far we are seeing a nice bounce. So even though the Bitcoin market isn't exactly in full-on bull mode, we are seeing healthy rallies. We're seeing consolidation. We're seeing accumulation. We're seeing those bounces. These are all good things long-term that show that overall the market is very healthy, right? A market that isn't healthy is a market that just, pumps 100% overnight. Everybody's excited. We're all making money. We're all making millions of dollars. Well, that's when you need to worry, right? Right now, we are seeing a nice, healthy uptrend for Bitcoin. Now, the only thing that I do have to say short term we need to be concerned about is the fact that we are, now keep in mind, Previously Bitcoin has put in these falling wedges, and every single time that we have put these in, we have had nice breaks to the upside. However, in this particular scenario, we are sitting very far below some of these major moving averages as well as some of these major levels. And it does look like right here, we have sort of hit the top, again, right here, you can see that we are in fact hitting the top of this falling wedge. So that is going to provide a bit of resistance for Bitcoin. Are we going to break through this? I can't say, 100%, but what I can say that we need to do is we need to break out of this, and we need to get back above the trend that started back here on January 8th, right? We have these two trends. Obviously, we fell way below this level, but this second level here has provided a lot of support for us, and I'm talking about this green line right here. And for us to really start to get back into that sort of bullish momentum, we need to get above $45,000, which gets us out of the blue zone, but really more specifically, closer to 45,730. So let's just say 46,000. Let's just say $46,000. Nice candle close on the daily above 46,000. And then I do think we will continue upwards. If we continue to get rejected at the $46,000 level, then we may fall down and unfortunately retest that 39,000. But the thing is there's not much room left in this falling wedge. I mean, you could see only right here, if Bitcoin was to keep falling, by the end of this month, essentially by the end of this month is what we're looking at. By February 1st, we need to break out of this falling wedge, and we need to break out to the upside if we do want it to be bullish. And talking about this ascending triangle here on the monthly chart, you can see that we are in fact back inside of it again. And I said that January was going to be a very interesting month. It's kind of, we just need to sit back and see what happens. Ultimately, we still need to have a daily candle close above $42,000 by the end of this month. That would be very bullish on the macro scale, and it would keep this ascending triangle intact, which is good. That means we're still maintaining bullish structure. But obviously short term, we do need to get above that $46,000 level. Short term, keep in mind, this is just on the daily, right? So a lot of things can change on the daily. On the monthly, we're looking good. On the daily, we do have some work to do. So really, just to answer, where's Bitcoin right now? On the daily, short term, not really looking particularly great, looking somewhat bearish to neutral. On the macro chart, on the bigger chart, it's actually looking pretty good. It looks like we're holding up very nice on the bottom of this level. So the other thing to point out too is, remember I said to start looking at these markets as a whole, right? We have a tendency to just look at Bitcoin, but realistically, we have all these altcoins. We have an entire crypto ecosystem. We have all these layer ones. And if you really look at the overall crypto market cap right now, you'll actually notice that even though we have fallen below the 21 exponential, which is this green line right here, well, we've done that before. We did it back here. And in fact, what happened, we found support on the 50. And you can kind of see, if I zoom in right now, we fell below the 21 exponential. But look at this, guys. We are holding above the 50 daily, the 50 weekly moving average. My bad, guys. Looking at too many charts lately. The 50 weekly moving average. So we have the 21 exponential on the weekly and the 50 weekly. We're still above it. So short term, not too bad looking. It could be a little bit scary if you're new to crypto, right? Fear and greed was down to 10, Bitcoin down 35, 40%, right? But just remember, guys, this is crypto. This is nothing new. I mean, how many 30, 40, 50% crashes have I seen in my 5 years? Countless, guys, countless. At least 40 of them, 45, 50. I don't know. I really lose track after a while. Very, very common in Bitcoin. You can see Bitcoin is, known for these crazy pullbacks. Obviously, we had like a 30% here, 40% here, 30% here, 50% here. This is just rough off memory, but I remember 50% here, COVID crash. That was crazy. 25% here, 55% here. So, being down 35, 40% is really nothing for Bitcoin overall. And the structure is still maintaining quite nicely. Now, why did this happen? Well, Lynn Alden actually, shout out to her, kind of predicted it. She said the December CPI comes out tomorrow and has a decent shot at reaching 7% a year over the year. And well, the report came out and we can actually see that according to the consumer price index, yes, in fact, we did have plus 7%, for December. So not really sure what they're talking about with this inflation. In fact, if we come down here and we look at all items, we're actually looking at 7.8%. So yeah, I guess the Fed is looking to taper. I guess they're looking to raise the rates a little bit, but doesn't really look like December looked too well for the economy. So I still do think that ultimately people are still looking into Bitcoin as a hedge, but there are still a lot of things that could affect it long term. But I mean, the numbers don't lie here, guys. I mean, you're clearly seeing that, the cost is up 5.5% on the year alone, 7.8% as of December. So, I mean, guys, inflation is still happening. I mean, I know that they're saying they're trying to change it. They're trying to pull it back. They're trying to taper. But really, ultimately, even these 0.25% rate hikes, they're kind of factored in. I don't think it's ultimately going to affect the price of Bitcoin. And super quick, before we get into, more potential price predictions, who is actually buying? Well, interestingly enough, we had the CEO of Ledger came out, and this is actually what he had to say.
Saw Bitcoin come off its record highs, a wobbly end to the year last year. What do you think is going to drive the price higher for Bitcoin this year?
Yeah, I think it's always the same. And actually, what you see right now is a retail trend in Bitcoin. The number of addresses with the minimum number of Bitcoin is actually growing compared to the whales. So I think you get a profound retail trend everywhere in the world. It just means that people onboarding Bitcoin, they trust Bitcoin more and more, and it's really the people that will push the price up.
So do we have some data to back that up? Well, it's very interesting. We have sort of two different opposing views right now. Some are saying that the institutions are running it. Some are saying that retail is actually coming into crypto. Don't forget, guys, Bitcoin and cryptocurrencies is one of the first examples in history where the retailers actually had the opportunity to front run the institutions, right? Usually the institutions get in before everybody else, and then they kind of give their scraps to the retail. Well, the retail was actually getting in before the institutions. So the institutions are feeling that FOMO, but nevertheless, data does show, for example, right here from Ledger Market Bytes, that the number of Bitcoin addresses with non-zero balances is an important metric. And yesterday it hit an all-time high of 39.73, which does potentially suggest that this is a retail-driven rally. However, just keep in mind that, for example, if you're using a ledger, every time you receive Bitcoin, it generates a new address, right? So it's a little bit misleading when you look at these addresses for Bitcoin because, yeah, you're like, oh, there's more people, they're coming in, it's smaller buyers, but also at the same time, you can have a Bitcoin whale that's been using a ledger for years and has done so many transactions that they could literally have 300 to 400, 500 wallets, and it's just one entity. So you got to take the data with a grain of salt because as Glassnode pointed out, and they do a lot of on-chain analytics, they were talking about institutional funds and long-term holders being the primary market participants. Now, long-term holders could also mean retail, right? The average investor, I've been holding Bitcoin for 5 years, so hey, it's a possibility. But they do point out a new pattern that has emerged. Now, they talk about something that happened back in 2016, 2017, and they say that the bull market ignited with an explosive start as new entities swelled in large numbers, peaking later on maximum hype cycle. The same market movement followed in March 2020 and peaked in February 1st of last year. So this thing down here, I can actually bring this up so you guys can see it a little bit bigger. This is referred to as the growth channel, and it's the bear market growth channel, essentially what they're calling it. And they say that new entities are continuing to grow. Despite this happening at a slow pace, it is worth noting that even during bearish periods, more users are still entering the Bitcoin market, which is likely to happen per Glassnode's analysis. And what they say essentially is that the bull market tends to springboard off this pattern. So, guys, if we actually, have a look right here, you can see that they are talking about the dormancy flow reset, accumulation deep in bear, accumulation occurs deep here. So yeah, I mean, ultimately it is looking like, even though there has been some selling, there has also been massive accumulation, and we are seeing accumulation on both sides of the table. Is it retail? Is it institutions? Maybe it's both. Maybe it is a happy, harmonious mixture of both, right? That is a possibility. But listen to this fundamental news. Listen to just how people are just switching their tone, right? So you have Swiss Bank SEBA CEO saying that his firm sees Bitcoin rising to $75,000 in 2022. Now I know $75,000. We wanted $100,000 Bitcoin last year, but guys, ultimately still looking at a $75,000 Bitcoin from where we are today. Bitcoin, even having the ups and downs, the crazy, boring, accumulative cycle that it had last year, still outperformed the S&P by almost 3 times. So Bitcoin was still the better place to have your money, and some of these altcoins like Ethereum, Solana, they did even better. right? So this is really what people are seeing. They say, we believe the price is going up. Our internal valuation models indicate a price now between 50,000 and 75,000, and I'm quite confident that we are going to see that level. The question is always just in the timing. Well, interestingly enough, you know who else came out and is starting to recognize Bitcoin as something they need to pay attention to? That's right, guys. The International Monetary Fund, or the good old IMF. They say that Bitcoin and cryptocurrencies have come to the fore of financial markets. According to them, they say our analysis suggests that crypto assets are no longer on the fringe of the financial system. Given their relatively high volatility and valuations, their increased co-movement could soon pose a risk to financial stability, especially in countries with widespread crypto adoption. Now, I know that that is supposed to sound like something negative. It's supposed to make El Salvador run for the hills and make them scared about their Bitcoin purchase. But I think really what it translates into is they're more scared of it. They see the threat. They realize that fiat is a diminishing return, and the best bet against that is obviously getting involved in Bitcoin and cryptocurrencies. Not to mention crazy bullish news we need to end on today. We have 3 things to go over. Number 1, former CEO Jack Dorsey has announced a Bitcoin legal defense fund that will help provide a legal defense for Bitcoin developers who are currently the subject of multi-front litigation. So this is pretty cool. I mean, you know, the thing about Bitcoin is there is no CEO. There are no marketing campaigns. Nobody's paying for promotion, right? Bitcoin is everybody's money. It's free. It's borderless, right? And it is essentially the people's money. But you know, who is the people's defense, right? I mean, you know, that is the thing right there. You know, we're going to call in Matt Murdock for this one, right? So yeah, I mean, they are essentially building this, which I think is really, really cool for that. And Jack Mallers, welcome Argentina. So we do have Strike app launching, available over for the citizens. Obviously, we know that the Argentine peso is not doing quite well. So they can, in fact, hold cash balances. They can hold it in fiat if they want. They can hold it in Bitcoin. They can use Bitcoin to transfer and transact. And definitely a massive, massive day for them. In fact, if if we scroll down here, he was also talking about dollars are now double the official rate in the parallel market, and other payment mediums have been born to facilitate transactions between different currencies, peers, businesses, etc. So, I mean, yeah, you can obviously see that this is definitely necessary. And finally, just another bit of news from the banks. We do have Milan headquartered banking group UniCredit, which has about 811 billion euros in total assets. They are denying that they have prohibited their customers from trading cryptocurrencies. They say that it was a misunderstanding. Now, there were a lot of people on Twitter getting riled up saying that their bank did in fact ban them from making crypto transactions, and one person even had their account potentially threatened to be suspended. They're saying no. What's the truth behind this? Well, I think what's happening is maybe they were being a little bit overreactive towards cryptocurrencies, and I think that they're starting to probably backpedal because they feel a little stupid. And they realize that it's the future, and if they want to, garnish this share of the market, then they're going to kind of have to hop on the bandwagon, right? So that is it for me today, guys. Thank you so much for coming back to the channel. Obviously, we have had this beautiful bounce, like I said, very, very nice off of this, very, very nice off this legacy trend. The only thing I'm a little bit concerned about is breaking out of this falling wedge. Now, the last 2 times that we did have a falling wedge, we did break out of it. Will we break out of this one? This is a much larger falling wedge. Keep in mind, we had a smaller one that we sort of broke down before. But yeah, ultimately, guys, I think that it was nice to see the relief rally for Bitcoin. I think a lot of this could have had to do with those numbers, inflation, 7%, 7.8% overall. So yeah, not really looking good. Balls in the Fed's court. Let's see what they do. My bet is still on Bitcoin. I still think that regardless of the year that we have for Bitcoin moving forward, we are going to see a great year for Bitcoin long term. And I think, 1 year from today, January of next year, I do believe that the price of Bitcoin will in fact be higher than where we are today. And I think it might even be significantly higher. So with that, thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. You're awesome. Be safe out there. And of course, if you are looking to trade these markets, we pretty much said that we were looking for a bounce yesterday, and we got that bounce. We absolutely called it. So if you want to learn how to trade crypto, definitely take advantage of the tutorials that I do have below. Also, there's over $8,000 in bonuses and $40,000 bonus pool if you guys want to just literally sign up for Femex and just like retweet a couple things for them. They're giving away free money. Don't miss out on that. And make sure that you watch these videos popping up right here, right now. Until next time, stay crypto. And of course, peace out.